we have some shocking developments in the economy right now. There's a derivative product that looks increasingly similar to a CDO like from 2008 that blew up the financial system. We've got a trucking company that has gone bankrupt, one of the biggest in Canada, and we've also got everything else that is going on with consumer sentiment. So let's get right into this, guys, and see what's going on. Let's start off with Canada's Pride Group files for bankruptcy protection, faces a $100 million lawsuit. So let's see what's going on here. So one of Canada's biggest trucking carriers has filed for bankruptcy protection after lender Mitsubishi Capital filed a lawsuit seeking $100 million. Pride Group filed Thursday for creditor protection under the company's Creditors Arrangement Act in Canada, which gives the company a stay of proceedings for at least 10 days. The bankruptcy protection filing came after Mitsubishi HC Capital filed lawsuits accusing the Pride Group's Sulkin Sam Johal, president and CDO, and Jasveer Johal, vice president, of defaulting on payments that they had personally guaranteed, according to Truck News. Now, you've just got to think about what is going on here, guys, because obviously, if you have got trucking companies that are going bankrupt, what does that say about the economy? And we can say that it's not just this company, is it? We've covered several trucking companies in the United States and Canada that have gone bankrupt, and a lot of this is due to the bullwhip effect. Everybody was ordering stuff online, logistics and freight was absolutely booming, and a lot of these business scaled up as you would expect, and interest rates were a lot lower. So that kind of encouraged them to try and grow their business with credit. And then what happened is the consumer cut back. They cut way back. The goods flowing throughout the economy slowed way down. As I've heard from you guys in the chat and in the comments, a lot of you guys work in trucking, a lot of you guys work in transportation and logistics, and you've all shared your thoughts and opinions on what is going on when it comes to the slowdown in freight and in goods passing through the economy. So it's very indicative of what's really going on in the economy across North America. So Mitsubishi HC Capital is seeking damages of $100 million in the lawsuit. Mississauga, Ontario-based Pride Group is a North American truckload carrier operating a fleet of 391 tractors and 1,200 trailers with terminals in Ontario, Quebec, and Alberta and Illinois. Along with Mitsubishi HC Capital, more than 20 other lenders have filed claims totaling $637 million against Pride Group, according to the filings with the U.S. Bankruptcy Court of the District of Delaware. They include Daimler Truck Financial Canada, $193 million, Daimler US, $69.7 million, Passier Financial, $46.9 million, and Volvo Financial Services, $9.8 million. So it looks like they couldn't afford all the trucks and the trailers that they leased or purchased or whatever they did, because they've got these massive amounts of outstanding debt that are now there. And obviously we know about subprime auto financing has been booming for the past 10 years. So is this another case of where even in commercial spaces like trucking, where you've also got these subprime financial arms that are going on? Because it's going to be the same companies that are dealing with obviously normal consumers as well. And now I want to go on to this because this is getting very important now with what is happening with commercial real estate. So CRE CLO market is first shoe to drop, says Jen Trust Neely. So this is really important to understand. An obscure investment product used to finance risky real estate projects is facing unprecedented stress as borrowers struggle to repay loans tied to commercial property ventures. Wait, you know, does this all sound familiar? Just replacing residential with commercial. This is exactly the same as 2008 when it comes to these derivative products, as we're going to get into. It's just absolutely crazy. Known as commercial real estate collateralized loan obligations, or CRE CLOs, basically just CDOs, they bundle debt that would usually be seen as too speculative for conventional mortgage-backed securities into bonds of varying risk and return. It's like where you have the tranches, essentially. It's just absolutely crazy, guys, when you really think about it. We seem to just go to doing the same stuff. So if you look at the delinquencies on this chart, share of delinquent loans in CRE CLO surges, you can see that if you go back to February 2023, the rate of 60-day delinquencies was around 2%. And then, you know, we had a spike in April 2023, and it was mostly flat and really started to accelerate in August of 2023, where that 60-day delinquency rate starts approaching 5%. And now we're over it. We're in fact heading towards 10% in terms of 60-day delinquencies. So what does that kind of tell you? And I've been saying time and time again, even if you go back to my videos back in 2021, that commercial real estate seems to be the most likely place where the black swan event is going to be. And why is that? Because just look at the amount of empty office space around you, and there's a cost to that. Somebody is paying for that. And what about all the speculation on that office space, which is what CLOs are? And you've also got bespoke tranche opportunity, which boomed right before 2022 when interest rates started surging. So all these derivative products were booming prior to interest rates surging because they offer more of a yield. And pension funds, believe it or not, are one of the buyers for these type of products, because guess what? They were chasing the yield, and that's why you see pension funds venturing into riskier and riskier products, which is kind of shocking when you think about pension funds, because they're meant to be the most safe and secure when it comes to these type of things, but apparently not. So if you look at this chart as well, so CRE CLO managers buyout record delinquent loans, about 1.3 billion of buyouts in 2023 matched previous 3 years combined. So you can see how it's just absolutely surged in 2023. So it's kind of crazy, because if you look at the origins of CRE CLOs, they date back to before the financial crisis. And again, you have to think about this. They were rebooted in 2011. Once again, you've just got all this speculation on commercial real estate, guys. And you really have to think about this, because obviously the amount of offices that are empty right now, the defaults that are happening, and you're even seeing pension funds that are taking big losses. If you look here, we covered this a couple of months ago. The office market is so bleak that Canada's largest pension fund sold its stake in an NYC building for $1. But the thing they're not telling you in this article is how much of that building, how many CLOs were there on that building, and then how many BTOs were also on that building. And it's absolutely insane when you really think about how the financial system just levers up on all these different products. And when it comes to commercial real estate, it is really nothing different. And then once again, the nightmare scenario, high interest rates are pushing more developments into receivership. So not only do you have existing buildings that are being pushed into receivership, you also have developments and buildings that are being constructed right now that are being pushed into receivership as well. So the passers-by, the construction site at Yonge and Bloor in Toronto, where the 185-story mixed-use development is slowly taking shape, looks like just any other, albeit on a grander scale. Workers are making progress, pushing up past the 50th story as the building's facade begins to take place. But then when you actually look at it, the project launched by developer Sam Mizani and partner Jenny Coco 9 years ago was forced into receivership in October after a key lender grew impatient with delays, rising debt, and ballooning costs. Last month, Mizrahi's firm was removed as construction manager, and you know, it's drawing attention because $2 billion is the price tag for this building. You're talking about a mixed-use office building they're building right now. You've got debt ballooning, construction cost ballooning. Meanwhile, you've got, you know, buildings that are being sold for $1, buildings that are being fire sale for 80% off. And also, not only that, you've got massive amounts of delinquencies surging in commercial real estate. So, yeah. This is really just not good. And then also, I want to say that maybe we're getting closer to the apex of all this, because some consumers and businesses are feeling more optimistic about the economy, says Bank of Canada survey. So the Bank of Canada says business and consumer sentiment improved during the first quarter of the year, despite higher interest rates still putting a drag on the economy. The central bank said on Monday it released its business outlook and consumer expectations survey, which showed increased optimism as people expect interest rate cuts are nearing. Because obviously everybody is expecting interest rate cuts. We keep hearing these cuts are coming and they keep pushing them out. And I've stated many times, I don't think they're coming unless something bad happens, especially if you've got Bank of Canada surveys that are coming out and they're saying that the consumer is optimistic and is expecting those cuts as well. And when you look at interest rates, guys, I mean, interest rates, they are low when you look back to the 1990s, for instance. But if you look back over the past 20 years, they're pretty average actually where they are right now. But the thing is, obviously, if consumers are expecting interest rates to drop from here, where are they going to go? Even if they did come down, let's just play out this scenario. They're probably going to drop like what, 25 basis points a time. Maybe they're going to go to 4.5%, something like that. You're going to see the Canadian dollar crash if the Federal Reserve isn't doing the same thing. So that will increase the price of goods, obviously, because a lot of goods are paid for in US dollars and we don't produce a lot of goods. We have to import lots of stuff, especially food. So food is incredibly dependent on the currency exchange, which is why food prices have gone up so much over the past 3-4 years, because even though exchange rate goes up and down, when it goes down, they put all the prices up and then they never discount the prices when it goes up again. It's very interesting, but I've noticed that a lot with what goes on in Canada with the grocery stores. And then consumer confidence, I mean, to me, it doesn't look good. It's below 50 still. And yeah, really, it looks like nowhere near where it was in 2019. And really, we only had consumer confidence that was actually fairly decent for about 3-4 months in 2021 during the massive, unprecedented amount of stimulus, all those loan deferrals, all those mortgage deferrals. So people weren't paying for loans. People weren't meeting their obligations. They were getting stimulus checks off the government. Households felt like they were flush with cash. And obviously that's a lot of reasons which caused inflation. And then in the background as well, in Canada in particular, we have obviously all the mortgage fraud. We have the housing bubble in Canada. And look at this. So this comes from Shazzy, Brampton's deadly gamble. Where is this? Honestly, because I'm already debating on calling the fire department about a rental down the road. There's about 8 men living in one house. There's about 7 cars, 4 in the driveway, 3 parked illegally on the road. And because one guy refused to move it, the city towed it. I'm seriously considering on going marketplace in Kijiji, printing out these ads and going to a meeting for landlords at City Hall and throwing these out to my local MPs. A mum, dad, and daughter were just killed from a house fire in Brampton from living in a basement apartment. I'm sick of these scum lords buying up housing and renting them like this, under the table rent, not claiming it, not telling their insurance companies it's being rented. At this rate, none of us will be able to afford a house in Canada because we can't afford it due to the rent and the scams these scum lords are doing. I know this is everywhere in Canada, but Brampton seems to have a rap over their name partly because of this. We've discussed many times on this channel about all the mortgage fraud that goes on in Canada. And one of the most common ones is I'm going to be living in the house, so I'm going to get a 5% down government-backed mortgage. And then guess what? They're renting it out. And you know, there is so much fake income, fraud stuff that goes on in the background. I've heard from people on the inside of these banks on how these mortgages get approved, how different people are financially incentivized essentially to just approve the mortgage if they're ticking all the boxes, and how the banks aren't really doing checks when it comes to money laundering either. You know, it's just absolutely insane. So the risk in the financial system is huge. The risk on the taxpayer's back is absolutely massive. So anyway, if you've enjoyed this video, I would highly recommend that you check out that video there. If you're looking for a VPN to get around the censorship laws in Canada, like Bill C-11, go to expressvpn.com/marketmania. I will see you in the next one. Take care.